My name is Davi Cunha. I am industry executive for financial services here in Brazil by Microsoft. Okay, and I'd like to introduce Robert Mancini. Okay, Robert is head of payment at Finastra. Robert, thank you very much for joining us, and let's have an open conversation about innovation, open platforms, and digital payments. Okay.
Thank you, Davi.
Robert, thank you. Robert, would you like to introduce yourself? Tell us a little bit more about Finastra and how are you contributing to bring innovation to our financial service industry?
Yeah, thank you, Davi. Appreciate it. So I've been with Finastra for almost 3 years now, but I come from a banking background. I've worked for 4 global banks, 1 Canadian, 2 US, 1 Japanese. I've also consulted global banks in my career also, working for some consulting firms. And in my latest role before joining, actually, Finastra, I was head of commercial banking for an international bank. So needless to say, a lot of experience going back to 1991 in banking across many different roles and financial institutions. In terms of Finastra, you know, the name Finastra is new. It's about 3 years old now, but we are legacy, so people will associate us to our legacy companies like Funtech, Mises, D&H, and a number of other companies that came together to form what is known as Finastra today. So we're basically one of the top 3, global fintechs. We cover core banking, payments, lending, trade, pretty much 90% of what a bank needs to operate. So we're very broad and deep in our capabilities. We have 9,000 bank customers across the globe. We operate in about 130 different countries. And bringing in these companies, these legacy companies together really gave rise to our Fusion Fabric open collaboration platform, which really is in the spirit of open platform, open banking to be able to share. So our philosophy, our core philosophy is that, innovation is driven from the ecosystem versus any single player. So a lot of the innovation that we're seeing in the market coming to our customers today is actually coming from outside of our 4 walls. It's coming through the ecosystem, which we enable through our platform. It's somewhat different than what most or almost everyone is doing in the marketplace, where they're trying to innovate within their 4 walls, either through acquisition or things like that. But we have a different philosophy in terms of how we can bring value to banks. I think that the platform is key because it definitely leads to more agility and faster time to market, while giving our bank customers the benefits of the ecosystem, even if it means sometimes leveraging direct competitors, right, to offer a more holistic solution within that platform. So the key to success for banks is building a bigger ecosystem and not a bigger bank, right? And we aim to provide the banks with the tools and access to achieve this.
Okay, Robert, great experience, great background, and of course, a big challenge to bring innovation to this very dynamic ecosystem. So this vision of collaboration is very, very interesting. So what I think that in the last years, we see a steady movement towards new real-time and digital payments platforms. Meanwhile, we've seen a growing competition in all markets, ranging from fintechs, new banks, and more recently, the big techs also. How incumbent banks can remain competitive in this scenario, or maybe better in this race?
Yeah, so that's a really good question. I think that, if you look, I think there's 2 ways of looking at it: before COVID and after COVID, right? Or during COVID, what COVID impacted. So I think if you look back even before COVID, banks were not keeping pace, I think, with some of the fintechs, neobanks, and tech fins, as you referred. But I think what COVID has provided is it's provided such a great acceleration that I think it's created a necessity And many banks and fintechs have started, and I think increasingly so, to see the benefits of collaboration to drive innovation. The banks, own the relationships with the customers, and the fintechs are shaping financial services from the outside in approach. And they're able to get ahead of the curve by meeting those changing customer needs, rapidly evolving customer needs, I should say, with new offerings today, while leveraging existing data and analytics that banks often don't. So, I think the reality is banks think they know their customers, but really, it's the fintechs that know their customer best, because they're actually using a lot of that data. And I think the banks really need to catch up quickly, because the market is moving rapidly, and they don't want to be at risk of being disintermediated with their customers. I think what people often fail to realize is that innovation is about the people first and technology second. At least that's my opinion. So at its core, right, an outside-in approach is about an obsession with the customer. So basically relying on customer needs and preferences to guide product strategy. The outside-in perspective is data-driven, and it really avoids making presumptions about customers, but puts them front and center and tests new ideas with them directly. The more traditional inside-out approach, in contrast, tends to either base strategy on resources like IT resources that are available, or internal presuppositions about what developers and end users might want or need. So the people first approach, when you think of fintech solutions, you think of seamless implementation of services. You think of a highly responsive user experience, and you'll generally be leading the way in customer education via an app, or leverage chatbots or virtual assistants, et cetera, as technologies. Customers want the immediacy of Amazon, right? And the personalization of Netflix in the more and more in all aspects of their lives. So banks need to be able to anticipate their clients' needs and not rely on them seeking the bank for advice. So the technology comes second. How we leverage AI, artificial intelligence, or machine learning to address that people first experience, right? So leveraging data integration points to expand that people experience and widen cloud adoption to increase access and security in the people first approach. So right now, it's the neobanks and other non-banks that are leading that race. I think in double-digit growth year over year, if you look at the numbers. But I think it's a long race, and I think that banks are starting to bridge these gaps slowly. And I think until one day in the not too distant future, we'll definitely reach an equilibrium in the market across the different players.
Yeah, great. I agree with you. It's all about people first, bringing customers at the center, and technology is really an enabler. And as I always say, the customers' expectation are changing very, very fast, and every day they need a more personalized experience. Regarding the incumbents, how do you think the main challenge for them to leverage the customer data in a most scalable way, so they can really provide a great experience for these consumers?
Yeah, so I think it's often said, right, that data is king, but not all data is created equal. And the key, I think, is trying to decipher how best to use it to your strength. So there's no doubt that there's an opportunity for banks to make better use of data, particularly when it comes to improving customer experience. But in practice, banks are often deterred from embarking on a journey to harness data more effectively, because they believe this is a costly and time-consuming undertaking. And in practice, doing something meaningful with data doesn't need to be a monumental thing, right? So I think starting with a small and easy approach, So for example, where billing is concerned, it's often straightforward for banks to use the data they already have and review the client's behavior, and thereby better understanding what the client's needs are. So for example, the bank may be able to use existing data to identify that a customer has brought a sophisticated and integrated receivable solution, right, is only using the solution to process checks. By informing the customer that there's an opportunity to integrate ACH, wire transfers into the solution, and thereby enhancing the straight-through process. So the bank can demonstrate its commitment, right, to helping the client increase automation and transform their banking activities. I think when you look at it, though, from a broader context, everything we know and see from the consumer expectation perspective is counter to a traditional bank's DNA, right? So, for example, banks are highly, maybe even overly risk averse when it comes to leveraging data for solutioning and trying new services outside of their core competencies. Another example is, another aspect I should say is banks operate in a different financial model, right, which reflects more stability and predictability quarter over quarter, especially in the approach to R&D with, low risk ROI models and et cetera. So part of their product development cycle. And then there's the people aspect, right? So the people that are working at the banks are often skilled for very specific tasks by line of business. And they're not necessarily aligned to do well in an environment where they need to start imagining new customer digital journeys or leveraging an ideation process to solution problems differently, right? This is not part of the bank DNA. So the extent that banks use data to improve a customer's experience is most often to reduce fraud risks or data breach and security risk, right? Those are the areas the banks are generally focusing on. And after all, if you think about it, right, it makes sense because banks recognize that they are still king when it comes to trust from the customers or consumers. So they want to make sure that they maintain top of the hill standing when it comes to that. But I think the problem is changing rapidly, and many of the newer generations, right? I've really never even stepped into a bank branch before. So just 20 years ago, maybe even 10 years ago, in some geographies, that was impossible, right? Tomorrow's customer will never have been to a branch. Who knows? Maybe they'll never even go into a grocery store to buy their groceries anymore. They'll just get them delivered, right? I mean, the world is changing fast. And just a decade ago, people would have laughed at you if you would have said, people living in large cities are going to get rid of their cars and leverage a ride share app to travel around, right? That wasn't even a thought. And today it's a reality for a lot of people, and the market is changing. So if banks really want to help their customers, they need to better understand their needs and really the root problems of what they're trying to solve. And then I think they can use the data and technology to reimagine banking and make it a seamless, digital end-to-end journey.
Yeah, great. Seamless, embedded in the customer journey. The data is all to really put the customer in the center. And another key challenge regarding data today is the advance of the term regarding to data privacy. Now that that data privacy regulations such as the GDPR in Europe and LGPD, the data privacy legislation here in Brazil, are putting customers in the control of their own data. And it seems to be not only local, but a global trend. How is it affecting the payments and platform landscape?
Yeah, good question. So LGPD, right, has been implemented in Brazil considering the European GDPR at its base. So at the same time, right, Brazil is adopting open banking, and one of the products that will be available is instant payments for companies and for individuals. Open banking has been designed, right, using LGPD and GDPR in its structure. The individuals will in fact own their private data. All sharing personal and sensitive data must be, must actually have the consent by the owner of that data, so by the consumer. Also, their transactions over the financial market as well. So the aim here is to reduce fraud and cyber crimes using personal data, that's really the objective. So Finastra has long been a leader in open banking across many markets like the UK, Singapore, and countless other areas. So this is kind of our core competency. In fact, our open technology, our technology for open banking or open platform is built under the technology framework, whereas the bank controls the data. So what is shared, with who it's shared, right, with outside of the bank, how it's shared, and basically full control of all aspects of data sharing stays with the bank. So I think this all sits, securely in the cloud within Microsoft Azure. And through that structure, we're able to provide that level of security and around the data and compliance to the spirit of what it's trying to achieve. I think that this is most likely affecting payments by changing the use cases. So if you change the access to data and you enable a more pervasive interoperability, right, across the ecosystem, then those new entrants will start to transform payments, and often in a fashion whereas payments become more invisible and part of a greater user digital experience.
Yeah, make a lot of sense. Actually, data privacy was a key driver for open banking, and really open banking has a high impact on how consumers pay. Could you cite any other example on how open banking can drive payment innovation?
Yeah, I think this all goes back to the data, right? So without access to the data, the ecosystem lacks the interoperability to transform payments and consumer buying experience. So I think consumers trust their banks, and they trust them to help make better decisions on whether they are shopping for a gift for their spouse or trying to go on their day without having to make physical payments or making large ticket item transactions much easier. So I think that banks will eventually need to transition their revenue models from a transactional fee structure to a service model, right? So you're charging for services rather than charging for transactions. So for example, right, if you take, instead of banks charging for a wire when somebody wants to, let's say, make a large purchase, like buying a house or buying a property, then they can charge for a service fee, right? So it's not only about the transaction element, but it's about the whole buying experience, right? So when you're buying a home, what do you need? You need to get insurance, you need to set up your utilities, and there's a lot of things that go with that experience. You can use the same example as buying a car, right? If you're going to go buy a car or buy a boat or buy anything, the consumer wants to be able to have that experience seamless. So if you go to the car dealership and you want to test drive the car and you like it, if you can make it all seamless and you can just drive off the lot with the car and own it, then that's a much better experience. So obviously those are large ticket items, but I think that open banking will allow new possibilities in the payments market, and it will provide data analytics of trends, services that we'll need to create, and how instantaneously we settle, right, those transactions. So one example is from one app from the Gold Source Bank that the customer has and will be allowed to pay immediately any kind of invoice anywhere or everywhere, I should say, 24/7, right? In a safe way without double checks, right? And the customer will see their transactions being processed, even if it's not at their own financial institution, and they'll see it in seconds. So there's a lot of, I think, examples we can cite here, but it's all about changing the use cases and the customer experience.
Yeah, great. It's all about transparency, frictionless payment experience. I think is critical. And another topic related to it that could maybe help to create those frictionless experiences is the topic of the digital identity. Okay, and as we move to digital, we see the rising payment fraud, as you mentioned, identity data, identity theft. Also, we have countries like Brazil, and we have a large unbanked population, dozens of million people, okay, with limited or restricted access to banking accounts. Do you think that the leverage of digital identities could promote more secure and efficient digital payments platform?
Yeah, so the digital movement for sure is giving to the market possibilities, right, to implementing banking services on a large scale and at low cost. So I think also the possibility of onboarding customers without the necessity to go to a bank's branch and send documents and sign off contracts, and motivating unbanked people to start their own relationship, with new or maybe challenger banks, right? So I think it's about bringing to that portion of the population a bunch of services that would not be offered to them because of complexity or cost or displacement needs. So therefore, unbanked will start to use payment mechanisms, and the expectation is that the total cost of these services will decrease considerably. And I think that digital inclusion is first and foremost a reflection of, broader environmental factors like access to technology at a low cost, and I think equally generational, right? If you think about the newer generations versus the older generations. So, the last time I looked, and I'm not quoting precise numbers here, but I think, there's somewhere between 4 to 6 billion smartphones globally, right? And it depends what research you're reading, you're going to get somewhere in that range. So, in fact, I wouldn't even know. So I live in the US, I live in the New York area. I wouldn't even know where to buy a non-smartphone today. I mean, it's pretty pervasive, I think, across the marketplace. I think for Brazil, if I remember seeing correctly, I think that Brazil has more smartphone devices than any other country in South America. So Brazil is definitely a leader as well, because you asked about the Brazil unbanked in terms of smartphone. So in terms of access, probably most telecommunication companies give phones for free if you sign up for their service. So for people even in the lower income scale, right, the smartphone provides everything they need beyond communication, but equally entertainment and other personal needs and luxuries, including banking. So access is not a problem in my view. The new generations are generally born with smartphones, and the expectation, in banking is, and I think it'll remain, and increasingly so, access to banking via mobile, even through traditional banks. So as you combine these environmental aspects into a bigger picture, to financial services being the more accessible via these devices through open banking. And, the natural conclusion is that payments and digital identity will contribute to the acceleration of digital inclusion.
Yeah, we have a big challenge to digital and financial inclusion. More and more people here in Brazil, and as you mentioned well, we have more smartphones here in Brazil than people, so we have a great possibilities to accelerate the digital access, but not only for the end consumer. We have opportunity also to drive digital and financial inclusion also to the small and medium companies. I think it's a great opportunity here. How do you see the SMB market to be benefited from this accelerated adoption of digital payment and open platforms?
Yeah, so SMB is an interesting space because, I think it's very evolving. If you look at small businesses today, they operate very differently than they did a few decades ago. And I think it's because the world is really shrinking, right? I mean, not physically, it's not getting smaller. But, these days, many small businesses have customers across borders, right? More so than they did before. And they rely on a more broader global commerce to generate revenues and expand their businesses. So as we see a lot of this transitioning in the marketplace, right, this introduces a need for more complex financial services like cross-border payments and foreign exchange, to basically access to different currencies to pay and buy either from suppliers or to customers, etc. So even if you look at it from a domestic SMB perspective, right, if you want to really simplify it and you want to make it a more seamless experience so they can focus on being more face-to-face with productive revenue generating activities versus back office tasks to keep their financials in check, right? So to give you an example here, right? So many local services, if you think about lawn care, window cleaning, carpet cleaners, plumbers, electricians, people who come to fix the appliances at your house, all that kind of services, right? Which are generally SMB. They want to get paid on site upon job completion. So if they come and they fix your refrigerator, they want to get paid for it. What they don't want to do is go back to their home office and put together an invoice and put it in the mail, send it to you. Because first, it's going to delay their DSO, right? Their days sales outstanding. So this is going to, and it's going to really elevate the risk for non-payment. So this is why, they have traditionally, right, taken card payments because then they know they can get paid right away. But the problem with card payments is that introduces financial impacts. So first of all, there's an impact to their margin because card payments have fees, larger fees associated to them, at least in most geographies. And then the card payment also can often be disputed later. So if you fix somebody's fridge and then something else goes wrong with it and it doesn't work, and the person who got their fridge fixed can call the card company and say, you know what, I don't want you to pay this person, and you can reclaim the funds. So, or you can stop the payment. So I think the issuer, right, so when you think about digital payments, right, they're immediate. There's less risk in terms of the good funds and much more attractive fee structure for the SMB. So I think this is good for everyone, as the services don't need to pad in the pricing to cover for these risks, right? So it actually reduces the pricing in the market for everybody. And the SMB can actually be more profitable because now they can be out, they can be focusing most of their time and more hours in their day in their core competencies, whether it's fixing refrigerators or cleaning windows or mowing the lawn, and much less time, sending invoices and reconciling their payments in their back office.
Yeah, it makes sense. I think this company needs simplicity, broad access, and so promoting the competition will be very good for these companies. And we are moving to a world now that is cross-border, or better, no border. Okay, so a key initiative that we are seeing in the world is moving towards provide a more payments interoperability between countries. We see recently interesting example coming from Asia, where Singapore and Thailand, they have recently linked the domestic and the real-time payment system. What the main challenge do you think to achieve such interoperability in this scenario? And do you have any recommendation for countries like us in Brazil?
Yeah, when it comes to payments, I think this is a very exciting topic. So in my view, Singapore's Pay Now and Thailand's Prompt Pay solutions, I think, are a great benefit for their people, for their consumers, as they can support small dollar transfers, right, cross-border via their smartphone app. So that's great. This is what I consider a natural force, and these discussions are ongoing across the globe. For example, just before COVID, I was involved in a discussion where I sat at the table with the clearinghouse in the US and Payments Canada, and we're discussing, such topics around cross-border payments, real-time cross-border payments. So I think the reason why, the market in general is moving slowly towards solution for real-time cross-border payments is due to regulatory hurdles, right? As these reflect independent bodies on both sides of the fence and generally don't cooperate, or I should say that not that they don't cooperate, it's more that their mandates are domestic, right? So if your mandate is domestic, you're not really looking at trying to cooperate with other countries, because that's not your primary mission statement. From a technology perspective, I think it's the easy part. Well, at least from my perspective. So let me give you an example of why I say this. So about 2.5 years ago, we had a hackathon on our open platform, and there was a small little fintech that showed up. I think there were 12 people or less, and they basically created a real-time cross-border payment solution in the span of a weekend, right? Being fueled by Coca-Cola and pizza. And basically within 2 months after, developing the concept at the hackathon, they actually got certified on the platform. And shortly after, they were running a pilot with many banks in 6 different countries across the globe. So if you think about it, just in a few months, they pretty much rolled out a real-time cross-border payment. And now that's a solution that banks are paying or buying today, onboarding, and they're enabling to their consumers and to their customers. So it's actually works great. It's cost effective. It's a great solution, and it was done very quickly. And it somewhat bypassed, right, the regulatory hurdles or the collaboration needed between countries to basically enable this. So the technology aspect is not the problem. I have other examples I can cite here, but unfortunately they're kind of in flight on our platform, and I can't really breach any NDAs. But all I can tell you is there's a lot of activity around this. And if we were to have this discussion a year from now, we can probably have a whole session on this. It's quite exciting. This is why I think real-time cross-border payments will be solved much sooner, and it's really going to be from the outside-in approach. With some key players and some new entrants and some very innovative approaches. My recommendation here for Brazil or for anyone, right, is I don't know. I don't think I can give a recommendation to the regulators. I think it's going to fall on deaf ears. I think it's like trying to move the Titanic, right? It's not easy from that perspective, and it takes a long time. But I think that many countries, including Brazil, are going to start seeing some real-time cross-border payments capability much sooner, as they kind of see some of these other activities that I referenced in a not too distant future.
Yeah, great. You provided us a very interesting example from this fintech that show up that the main issue is not technology. Okay, definitely. And I think this is a very interesting topic that it of course deserves a whole session only to discuss it. Very because it directly will impact on how consumer pay. It's very interesting. And the way that customers are paying or accessing financial services is changing a lot. Okay, today customers don't need to go directly to the bank or to the mobile banking app. They are changing so they could consume payment financial services from non-financial companies like retailers, e-commerce websites, ride sharing companies. So it's the way how they are accessing is changing a lot. And this phenomenon today we call it embedded finance. Okay, it's getting strong day by day stronger. How do you think it will affect the digital payments platform?
Yeah, and if you ask three payment experts the same question, you'll probably get 3 different responses here. But I think that from my personal view, embedded finance is a prime opportunity for banks. On the flip side, many banks might view this initially as cannibalization of existing revenues, right? But the reality is that the banks risk losing more in the long term if they don't go ahead and start to drive the embedded payments movements across in verticals like healthcare, insurance, education, not-for-profit, countless other verticals, right? And especially if you're first to market there, which is a big difference. So if you look at it, right, kind of long term, payments are going to become seamless across everything, right? I mean, you talked about rideshare. So Uber was just the beginning. And tomorrow, you'll be able to order your food from your smartphone fridge, and the payment will be seamless, right? You'll be able to go fill up your car at the gas station and you won't have to pay anybody because they're going to recognize maybe do a dual authentication on you and maybe an IoT device that's on you along with your car GPS, and it'll do an authentication. It'll basically just pay for the fuel automatically, right? I mean, I'm just making up stuff right now, but I think you get the idea. So I think if you look at the way the market is going, I think everything is going to be embedded. And when you think about the overhead, right, the other aspect is think about the overhead involved in some of these verticals. Think about when there's an insurance claim and they need to come out and all the things that they do for you to get payment on that insurance claim. Healthcare is another example, especially in the US, right, around the healthcare claim. It really drives the cost, and by driving up the cost, it's really bad for consumers. And if you can embed payments, right, and you can lower that overhead, then you're solving more than a user experience. You're creating an STP process, which is going to make it a lot more effective, and it's going to have some real positive changes, I think, in our society. So I think this is a bigger deal than what most people might think it is, but I think in fact, I think that others within these market verticals will be forced to change once the early adopters start to inflict these real financial changes. So if you just go back and look at what Uber did to the taxi business across the globe, while the first adopters in healthcare and insurance and other verticals are going to do the same thing to what Uber did to the taxi business. So better to be first than to be last here.
Yeah, great. With the embedded finance, you see this interconnection of different industries. Okay, it's like healthcare, insurance, payments. I think it's a great opportunity to be much more connected into the customer journey, so and create a similar experience. And of course, I believe this will be very good for driving new experience, thinking on digital and financial inclusion that we need a lot here in Brazil. Okay, and another key point here, financial institutions, across the world today are day by day exploring the digital asset and the cryptocurrency. Okay, you have examples such as banks partner with companies like Ripple to explore new ways to do cross-border payment and remittance using digital currency. Another example, we have China, who recently released the digital currency, the Yuan Digital. Okay, and we also have movements like central banks and regulators from all around the world, like Brazil, UK, even United States. They are starting to explore to study the benefits of this digital currency. Okay, mainly in the form initially of the CBDCs, that are the digital currency issued by the central banks. How do you think this initiative will impact the future of the payment industry?
Yeah, so this is one of those other ones where we can have an entire session.
Definitely.
So a couple of names you threw out there, right? So you threw out Ripple. So Ripple is actually a strategic partner of ours. They're actually embedded within our payment platform. So a lot of the customers who are putting in our technology are actually implementing Ripple as part of their payment hub solution. Definitely lots of positive traction there. I think when you talk more broadly, right, about crypto, I think it's real, and I think it's getting a lot of traction. Many of our customers, in fact, I would say increasingly, are asking about crypto and moving to crypto. And I can give you one example, only because there was a press release on it. So there's a U.S. bank, Silvergate Bank in the U.S., who is actually they made a public announcement that they're going to be the issuer for Facebook's DM stablecoin, right? So we've been working with them about doing more regarding our payment platform in crypto, but banks are actively looking for crypto use cases, and we feel that we can help these customers form strategies and best position their payment modernization platforms. I think it's scary. It's one of those topics where it's scary to a lot of people, right? The concept of securing currency outside of government fiat paper, somewhat of a novel approach. But I think that now that the cat is out of the bag and, it's really getting the traction, I think that we're going to see an accelerated growth. And again, it's one of those topics where if we have this conversation 1 or 2 years from now, it's going to have some serious implications on the payments industry.
Yeah, definitely a great transformation in the payment industry as this new open platform and open models bring new opportunities for everyone, bringing more inclusive solutions, bringing new opportunities to connect all the people, countries, very, very exciting times in the payment industry. So, Robert, we are approaching the end of our talk. Okay, do you have any final thoughts to share with our audience?
So final thoughts, I mean, a lot of the discussion was around open banking, right? So if you think about the spirit of open banking, it's all about fostering an environment of collaboration across the ecosystem to elevate the value for consumers, right, in a secure way as it relates to information, which we call data. So it's meant, right, to open up new products and services to all customers. Get a better experience in an open market approach. And I think that's why a lot of people are saying, right, that data is the new oil, and I think it is. So when you peel back the onion on open banking and its core intentions, right, it really means that ecosystem players, whether it's fintechs or banks or whoever in the ecosystem, they really need that agility and access to open APIs to create these services that are going to benefit the consumers. And at Finastra, that's why we built the open platform, which allows our customers, which are the banks, to build these innovative new digital transformational experiences in a highly agile and truly open model, right? So in this way, we want to enable banks to leverage the entire ecosystems, right, from banks to fintechs to universities, consultants, et cetera, to collaborate in the innovation journey. I strongly believe that the power of the ecosystem is much greater than any single player. And then finally, this approach not only elevates the value proposition for customers, in a more cost-effective approach, but it also introduces new revenue models as ecosystem players can now monetize services in ways that were never done before. So, for example, right, banks might want to monetize their services for other banks and use via apps available, through the platform. So this path, I think, will lead to a game changer in that the bank's business model and its fundamental operating structure. So with that, I just want to say the future of finance is open, and I want to thank you very much for having me. I appreciate it.
Yeah, perfect. The future is open. So thankful to you and to Finastra to be able to share this thought with us. And we know that you were earlier to understand the benefits of the ecosystem, the power of the collaboration. I think this is a good message to provide to our not only Brazil but our global ecosystem, from regulators, from financial companies, fintechs, insurtechs. I think the power of the collaboration will go beyond with more innovation, and I think driving more digital and financial inclusion. I think this is really important. So Robert, again, I'd like to thank you so much for joining us in this conversation. And also, again, my special thanks to Finastra for the collaboration for the Open Banking Week event. Okay, thank you very much.
Thank you, Davi. Have a good day.